Hello and good morning. It's me, Kenny Paul Curry, your host of the party. Today is Thursday, October 14th. And what's going on today? What are the things in the markets that we need to know about, right? So here we go. CPI yesterday showed that inflation is running at a 13-year high. PPI is due out this morning at 8:30, so that's going to be another read. 10-year treasuries, though, back off to 1.53%. Banks kick it off, right? Look for Citibank, Wells Fargo, Morgan Stanley, Bank of America, PNC, all to report today. UNH already reported and beat on both the top and bottom lines. Oil resuming its move higher, and futures are looking higher at the pre-opening. And what are we having for dinner tonight? We're going to have a classic bolognese, so rigatoni with a classic bolognese sauce. It is delicious. So look, stocks struggled most of the day yesterday as investors tried to digest the kickoff of earnings season, more macro data that spoke directly to inflation, talk of even more supply chain disruptions, along with the latest FOMC minutes from last month's meeting. Toss in the drama that's still unfolding in D.C. over the massive $3.5 trillion stimulus bill, and you have plenty to focus on. By the end of the day, the Dow ended the day flat, completely flat. The S&P gained 13 points, the NASDAQ added 105, the Russell gained 7, while the transports gave back 12 points. The 10-year Treasury ended the day yielding 1.53%, a dramatic move lower considering that the economic data revealed that inflation is running at 5.4%, a 13-year high. But it wasn't worse than expected. So yes, while it's high, the estimate was for 5.3%, so the markets and investors were somewhat prepared for a high number. What investors celebrated was the fact that it wasn't stronger, much stronger than that, right? Gold ended up $35 an ounce to $17.93. Oil was flat on the day at $80.61 after trading as low though as $79.50. The dollar index ended a bit lower at 94.04. Next up were the Fed minutes, and they suggested the start of a taper could begin in mid-November versus the mid-December consensus estimate. The tapering would last about 8 months and be over by June, July of 2022. The minutes also continued to repeat the narrative that tapering and interest rates increases were not connected and remain mutually exclusive as they try to keep the markets calm. I think one of the big reveals, though, was the fact that several members preferred to proceed with a more rapid tapering pace, suggesting that the fracture is getting worse. And more members of the Fed committee are concerned about the pace of inflation and what that will mean for future Fed policy. And that was clear on Tuesday morning when Jimmy Bullard, who's the St. Louis Fed president, came out and said exactly that. And I pointed this out, right? It's the way they do it. Recall what he told you. It's the Fed's way of floating the balloon, revealing what the group think is. Bullard's comments reflected what the Fed minutes revealed yesterday. Recall how he said that he favors a November start to tapering, which was a bit more aggressive than what investors had estimated, and so we saw markets get weaker, right? Then yesterday, the Fed minutes revealed that once they announced the plan on November 3rd, they could begin the process by mid-November. November 15th, that's mid-November, exactly what Jimmy suggested. Now, it could be pushed in December or January. Either way, it doesn't make a difference anymore. They have laid out the possibility that November is alive and well, so get ready, because it appears that we're no longer thinking about talking about when to taper, but we're now getting ready to initiate the plan, which is good. And when it starts is irrelevant, right? Unless, of course, it doesn't start at all, right? So whether it's December or January, it makes no difference now. In any event, yesterday's action is also suggesting that investors appear to be okay with what they heard, right? On both the inflation front and the tapering front. What they're concerned about, though, is the building supply chain issues that are now dogging the economy as they continue to evaluate the resilience of the U.S. economy, considering the coming reduced central bank support, right? So they're trying to put it all together. In fact, Bloomberg tells us that all the companies that have reported so far for their third quarter earnings, of which there have been about a dozen, the C-suite has mentioned supply chain issues more than 3,000 times, a data point well ahead of last year. And like I said, there's only been about 12 companies that reported. So can you imagine how many more times we're going to hear about supply chain issues over the course of the next 3 weeks? I guess you have to think about it, right? You can celebrate the fact that maybe we're done with COVID-19 issues and now we've moved on to something else, right? In any event, U.S. futures this morning are higher. Dow futures up 200 points. The S&P's up 30. The Nasdaq's up 130. The Russell adding 20. 10-year yields holding steady at 1.533%, right? So that's giving some support to equities. Economic data today includes more inflationary measures, the PPI, Producer Price Index. And remember, this is the data point that talks about prices at the input level, what it costs to manufacture the products and the pace at which those input prices are rising. Because ultimately, those price increases are going to be passed along to who? To you and me, the consumer, or at least that's the way it used to be. Maybe it's different this time. I doubt it, but maybe it is. Expectations for the PPI today are plus 0.6% month over month, 8.7% year over year. Ex-food and energy of 0.5% month to month and 7.4% year over year. So the key today is going to be squarely on those numbers. Other economic data points this morning are initial jobless claims of 320,000 and continuing claims of 2.67 million. And then we have rising wages. And while rising wages may be a welcome result, you can expect that those higher wages are also going to be passed on to the consumer. Unless, of course, apparently you're Jay Powell, because you had to listen to the Bloomberg interview. And if you haven't listened to it, you should go search for it and find the interview yesterday with Bloomberg and Jay Powell. In it, he acknowledges that wage inflation could result in a wage price spiral, inflationary environment that we've seen in the past. But currently, there is no indication that today's higher wages are pressuring companies at all to raise prices, should cause that wage price spiral, right? And then I have to say, come on, Jay, open your eyes. It's spinning out of control, and you made that very clear in the release of the minutes. You acknowledge that. And while you may be trying to control the narrative, we are all bracing for continued higher prices going forward. In fact, CNBC's Kelly Evans last night tweeted out a picture in her local grocery store. 1 gallon of whole milk, $8.98. Just FYI, that's up from $3.32 last year. That's a 170% increase in a basic food source. And we haven't even talked about steak, pork, fish, or chicken yet. And today we're getting more bank earnings, right? Remember, yesterday we heard both from BlackRock and JP Morgan, both beat on the top and the bottom lines. Investors rewarded BlackRock, taking that stock up nearly 4%, while they punished JP Morgan, taking that stock down 2.5%. Really, in a tale of two cities, right? Investors sold the rumor and bought the news in BlackRock. Look at the chart. While they bought the rumor and sold the news in JP Morgan. Again, look at the chart. That's a quarterly trend. By now, you absolutely have to be used to it. Today, we're going to hear from Citibank, Morgan Stanley, Wells Fargo, PNC, Bank of America. I expect the story's going to be the same, right? They're going to beat on both the top and bottom lines, blah, 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 blah. And this morning, we already heard from United Health, right? UNH, and guess what? They beat, reporting $4.52 a share versus $4.39. And that stock is quoted up about $3, maybe a little bit more. It's fluctuating right in the pre-market. European stocks are up as well today, right? All the regional centers are up about 0.75%. Global investors taking it all in stride. Rising U.S. inflation, rising European inflation, and the increasing pressure that it's going to put on the central banks around the world. Think Fed, ECB, Bank of England. Talk of rising interest rates now happening in mid-2022 versus the end of 2022. But that's a fluid conversation as well, right? You could see a change in that policy at any time over the next couple of months, depending on what the macro data does. Oil's up 1.1% at $81.32 a barrel, as increasing natural gas prices are causing a switch to oil as winter approaches, right? So more demand for oil. Oh, wow. Look at that. Bitcoin. Trading up to 58,000. Ethereum's trading at 3,600. News out of Russia that Putin says they're going to accept Bitcoin as a legal tender. Interesting. That story's unfolding. The S&P ended the day at 43.63. Again, just a hair below the trend line resistance at 44.64 as it attempts to kind of stabilize, right, and find its way. This morning, the action does suggest that we are going to open solidly above the trend line and look to make our way to 44.35, which is the next level of trend line resistance. The talk today is going to be the same, right? It's going to be inflation, Fed policy, supply chain issues, and earnings. Certainly supply chain issues within those earnings reports is going to be the thing to watch. Remember, you can text the word invest at 21,000 on your cell phone. You're going to get my digital business card downloaded right into your phone. Feel free to send me an email, a text, a voicemail. I'm always happy to engage and talk markets. planning, thoughts, concerns, ideas, whatever's on your mind. You know, you can also follow me on Twitter and TikTok. At Kenny Polcari is my handle, and on Instagram, which is KennyP1961. So what are we having for dinner tonight? It's a classic bolognese sauce, right? Which is just perfect and it feels right. Because the news is mixed, right? Really? But investors appear to be okay. And the world appears to be on the mend. So we're going to try this classic bolognese sauce, which is hearty. It's good, especially it's good on a cool fall evening, right? So what exactly is bolognese sauce? It's a meat-based, thick, hearty sauce for pasta that originated, guess where? Bologna. Now, Bologna is the largest city in the region of Emilia-Romagna in northern Italy. It's the 7th largest city in all of Italy. It's very cosmopolitan. It's a city that's rich in art, history, music, culture, and food. It's also home to many of Italy's finest universities, right? The sauce has numerous variations, but no matter how you make it, you can't really go wrong as long as you stick to the basics, right? So for this, you're going to need equal parts of ground beef, ground veal, ground pork. Now, you can switch that up and just use all ground beef, whatever. You need 3 large cans of plum tomatoes. You need fresh basil, whole milk, olive oil, salt and pepper, onions, carrots, celery, and garlic. You want to begin by sauteing the sliced garlic in some olive oil. So get in a big pan, put the olive oil, put the sliced garlic in, medium high. You don't want to burn it. You just want to saute it. Now add in the diced onions, carrots, and celery. Stir it, cover it, allow it to cook through and soften up, stirring about every 5 minutes or so. Once the veggies are softened, add in the equal parts of meat and brown, right? Season with salt and pepper. So the pork, the veal, the beef, or maybe just the beef, however you do it. Next, run the plum tomatoes through your blender, right? You don't want to liquefy them. You want to leave them a little bit chunky. So just do it quick on like a pulse, right? Add the tomatoes to the sauce. You want to make sure that the sauce is not all meat. You don't want it to be like a chili. It's got to have enough sauce in it. So just make sure you add enough tomatoes. You can also add a little bit of water, right? But it is supposed to be a hearty sauce, so keep that in mind. Now you add in some fresh chopped basil, salt and pepper, bring it to a boil, turn the heat down to low now and let it simmer for about 45 minutes. Stirring it every once in a while, turn the heat off, let it cool for 10 minutes, and add in 1 cup of whole milk. Stir, taste it, adjust if necessary, add a little bit more salt and pepper if you need it. Now bring a pot of salted water to a rolling boil. Add your rigatoni, right? Rigatoni is that nice, big, fat, short pasta. Before straining, cook it till al dente, 8 to 10 minutes. Before straining, remove a mugful of pasta water to re-moisten it. Drain the pasta, put it back in the pot. Add a little bit of the pasta water just to moisten it. Do not make a puddle, right? And now once you do that and you've re-moistened the pasta a little bit, then add a ladle or 2 of the sauce and mix it well so that you coat the pasta in the sauce. Now serve this the lightly coated pasta in warm bowls. Add a ladle of bolognese sauce on the top of each dish and sprinkle it with fresh grated Parmigiano cheese. Always have more Parmigiano cheese on the table for your guests because, you can never have enough cheese. As far as I'm concerned, you can never have enough cheese. In any event, this is a hearty dish, right? So you should have a hearty red wine. If you're going to drink wine, you should have a hearty red wine with this. The Brunello di Montalcino, which is a delicious red wine, is really hearty. I really save that more for meats. I don't know, maybe with this you drink something like a Cab or more Merlot if that's what you want. But you don't have to drink wine at all. But if you want to drink wine, that's kind of what I would do. In any event, the day is getting started. You can see the sun is just starting to come up here in South Florida. It's going to be another beautiful day. I don't know what you're waiting for. Come on down because the weather's fine. But until tomorrow, take good care.